we just recorded a great episode with Jeff Higgins. Jeff, he spent the last 15 years building up a incredible Section 8 affordable housing rental portfolio, currently up to 90 units. Not only that, but he's starting to transition his life to working on himself and helping others work on themselves as well. So he's started a group called the Fraternity of Excellence. Definitely something for people who are listening to this episode who want to improve themselves to explore further. You know what? I signed up myself. Before we even got off the call with Jeff, I'd already paid for my membership, become a new member to this group. So I'm excited to see where it goes. But that being said, Patrick, what do you think about today's episode?
I mean, you summed it up great, James. I mean, absolutely fantastic episode.
You want to start?
As always. No, I thought that was great. I mean, shit.
Okay, fine. We'll keep it in, man. No bloopers. All bloopers. Keep in the bloopers.
All bloopers. It was awesome. Listen till the end. As always, we actually got 2 new books that no one's ever talked about before. So here it is. How's it going, everybody? And welcome back to the Real FI podcast. I'm your host, Patrick McGrath, with my co-host, James Rippion. How's it going today, James?
Going well, Patrick. We are on a roll with having some great guests here on our podcast, and I think we're going to keep that momentum up. Today's going to be no exception. Today, we got Jeff Higgins with us. Jeff is going to give us a little bit of background about what he's doing, what he's got going on in life and business. So without further ado, Jeff, why don't you tell our listeners a little bit about yourself and the things that you've got going on?
Patrick and James, thank you so much for having me on the show. I am excited to be here. Yeah, I'm a long-term landlord. I've owned property for since 2005, so it's been about 18 year now. I bought a piece of rental property every year since 2005. I manage a portfolio in 90 units with 55 in Massachusetts and 35 in Florida. Moved down to Florida here in 2019, so taking on a new market, and I have some other interests too. I spend a lot of time running an online men's group called the Fraternity of Excellence. So between the real estate and the men's group and my family, that's how I stay busy.
I love that. So we have a lot to unpack here, and I kind of want to get into both sides, not just the real estate, but also the men's group as well, and how that's been able to, kind of shape your journey for the last few years and what that's looking like. But let's go back in time to 2005 and talk about what were you doing then, and kind of why did you even get into this whole real estate game to get you to this 90 plus units?
Sure, man. It's a long look back, and I guess it all started in grade school. I didn't like school very much. I didn't like doing what I was told and reading the books I was told to read. I always had a very independent streak. So I graduated college. Took me a very long time, but I graduated college and I got a job, and I was miserable. It was like 6 months, and I had to set an alarm and fight traffic and go to work. And I looked at myself in the mirror and said, I would rather fail being an entrepreneur than succeed as a corporate employee. And, it's for some people, and that's fine, but it just wasn't for me. So I quit my job with no idea what I was going to do. And I started playing online poker, and it was way back in the glory days of online poker, much, much easier than it would be to start today. But 2004, 5, 6 were probably the easiest years ever. So I got by for a couple of years, and I was like, this isn't a long-term thing though. I better figure out what I'm trying to do. So I looked at a lot of different investment strategies, and, I trade today, and I was looking at trading back then, and I struggled then. And the stock market was always, couldn't put my hands on it. It was too tough for me to grasp the reliability of a monthly income. And I started reading about real estate and, Rich Dad, Poor Dad, and all the classics and all the cliche books. I read them all, and they started to make some sense. So I was like, you know what, I think I can do this. I can structure a deal. I'm reading about, private financing, and I'm going to seminars, and I'm going to gurus. I signed up for every seminar. And finally, 2005 prices were very high. So I was looking for cash flow properties, but there weren't any. By the time 2008 came around, cash flow was starting to appear. I bought a 4-family. I tried it out. I'm like, are these people going to pay me rent? I don't even know if this is going to work. But it started to work. And quickly I was like, oh, wait, now I understand how this works. Let me do a lot more of this. So prices kept coming down for a couple of years, but rents didn't come down. So the deals just kept looking better and better and better. The deals that weren't there in 2005 and 2006 started to really appear, and I was ready for them. So I bought a lot in those years, and that kind of set me up for up till now.
Well, let me ask you this. Did that kind of freak you out, buying on the downward slope there when prices were kind of decreasing as you're entering the market, and then obviously rents were there, so that offered a lot of security. But did you have any hesitation about getting in at that time?
So yes and no. I mean, I always tell people a deal never looks good on the day you buy it. In hindsight, it looks obvious, like that was a great deal. But even if you're getting a good deal on that day, you're like, oh man, how, like, I'm paying more than anyone else was going to buy it for. So there is some uneasiness, but I was hyper focused on cash flow then, and I still am today. And it's made life easy because if I'm only buying for the monthly return and I look at appreciation as just a bonus, then as long as the monthly return is there, I'm happy because that's what I signed up for. So focusing on cash flow has really made my journey less sleepless nights, I'd say.
I love that. I love that. And for everybody out there that's listening, a lot of people get tied up on what is good cash flow. What's a good cash on cash return? Is it a per door metric or whatever? So like back then, what were you kind of looking at that made a deal make sense to you in regards to cash flow or cash on cash?
Not much different than I am today. I mean, even though it's gotten tougher to find, but I mean, the 1% rule is a good rule to me. Obviously, you're not going to cash flow like crazy on 1%, but oftentimes you can find something that's like a little over 1%, but you can see how logically the rents are going to rise, or perhaps the rents are artificially too low. They're not realizing the true value of them. So, if you're buying something at 1%, but you can see it getting to 1.3, 1.5 in the somewhat near future, those are most of the deals I've done.
I love that. I love that. I also want to ask, those properties that you bought, 15 years ago, where are the rents now today? And did you even imagine that they would be where they're at now?
They're a lot higher. Some of them are double. Some of them are over double. And no, I never even really thought about it like that much. I thought, 30% increases would be, life would be good, but they've kept going. And especially like since 2019, a lot's changed just in the past couple of years. And rents have exploded in both of my markets, Central Massachusetts, which surprised me. I thought Central Mass might suffer compared to Florida. It makes sense that rents are doing so good down here because every day it gets more crowded down here. We have so many people coming and there's not enough affordable housing. So yeah, that's the other thing. My section of the market is class C and D. I stay at the low end because I find safety there mentally. I always think if we went into a deep recession, some of the short-term rentals and some of the luxury rentals, the demand for that might not be as strong if we're in a severe recession. But if I'm renting to Section 8 and I'm renting the cheapest apartment in Sarasota, which is what I do, that demand's always going to be there as far as I can tell.
I couldn't agree more. I tried to go ahead, James.
Yeah, I was going to say, so have you had that same strategy consistently throughout your real estate career? Did you start CD Section 8 and you're still doing that to this day?
Pretty much. And I've had my eyes open for other deals. And, I've bought some stuff that I guess isn't technically C or D, but that's where I feel the most comfortable. That's what always makes the most sense to me. So while I'm looking everywhere, I'm always finding myself back to that because it's what I know and it makes sense to me. And to me, it's just so much less risk there over the long term. I'm always very risk conscious. I'm always looking at the downside. Appreciation is just a bonus. I'm protecting my downside, but appreciation happens when you hold for a long time. So you get both sides.
So you're saying something that's super counterintuitive. You're talking about CD property classes, but you're risk adverse, and you're protecting your downside this way. So bridge the gap for our listeners that way. What do you see in C and D class real estate investment opportunities that kind of hedge your risk and give you more opportunity? More specifically, maybe get into the Section 8 side of things and how that works into protecting your portfolio.
Sure. First off, the cash flow ratios, like the 1% rule, you're going to find it much easier in CD than you are in a luxury property. If you buy $1 million house, it's not renting for $10,000 a month. It's renting for $6,500 maybe. But I'll buy a condo for $150,000 and it'll rent for $1,600. So right off the bat, because your cash flow is higher, to me, your risk is lower. You're not going to become a forced seller because you can't service a note. The evergreen demand, the fact that there is a shortage of affordable housing, certainly in markets that are strong markets. I mean, there just isn't enough of it. And no one's building it because it doesn't even make sense to build it because the cost to replace the properties is much higher than I'm buying them for because they're age depreciated properties. So when you put in the whole picture together and all of the factors, to me, it takes a lot of the risk out. I mean, I see other people make a lot of money doing short-term rentals, and I'm like, good for you. but I don't like the risk profile, and I also don't like how hard they have to work, man. They like so much. You got to nail it, and the people at the top doing well in that, they're working hard and they're very talented. And I'm telling you, you all you got to do is service your responsibilities in CD. I am providing you this shelter. I promise you it will have running water and heat. And if those go out, those are my responsibilities. But that's about it, you know? So, and like, I'm not trying to get a 5-star review by making sure that you had the nicest furniture and it wasn't scratched.
Exactly. And I mean, I see that because you're exactly right when it comes down to, you know, when I list an apartment, I try to be like a C plus. I'm targeting like that C plus B minus ish area. And like you said, like there's every time I list a place, there's tons of applicants before they even come and visit the property. You know, I get the pick of the litter of those people. And when you're doing Section 8, which I kind of want you to dive into, because people hear horror stories about Section 8 or HUD housing vouchers or anything like that, you know, but in my experience, it hasn't been bad at all. And I really want to get your experience on that as someone that has, you know, a decent portfolio of properties like that, you know, what your experience has been, and is the myths true, you know, about people trashing the place and all that kind of stuff.
Yeah, I love Section 8. I think it's the best thing in the world for a landlord. High-end tenants can trash your house. They can throw parties. I've heard stories of NFL football players destroying short-term rentals or, you know, long-term rentals. So yes, your house can get trashed, but those stories are magnified. You know, if they happen 1 in 100 times, you hear that story 90 times. You don't hear about the story about everything went smoothly and then they moved out. I love most of my Section 8 tenants. They need a place to live. They value, since some people don't work with them, they appreciate that I do, even though I'm, you know, I'm doing myself a favor as much as them. But there's an understanding. I understand the incentives. You know, they're being given a benefit and they want to keep it. So I think they're incentivized to behave even better than a paying tenant who might be more entitled or more demanding. You know, I take my responsibility, like I said, to uphold my end of the deal very seriously, but you know, filling them, there's a lot of people that try to avoid them. They discriminate against them. And since I welcome them, I have more than I can handle. I mean, I get calls when I have no vacancies constantly looking for my rentals. So that has fulfilled, like, my demand will outpace my supply for a very long time.
I am currently getting ready to sign on my second Section 8 HUD tenant. And I asked the girl, I said, she just got her voucher. I asked her, I said, how long did it take for you to get this voucher? She said almost 3 years on the waiting list to even be able to get the voucher. So like people have to wait forever to get these. And then once they get them, like you said, they have every incentive to be good and treat the place right and pay on time and make sure that it's clean because it gets inspected every year by HUD. So like you're so right. And I think there is there has been a bad stigma of Section 8. And like you said, it's all the horror stories that really get amplified.
You bring up an interesting point because, and I'm not sure if you want to get into it or not, but that's a problem. The fact that, you know, I need assistance now and I get it 3 years from now, that incentive is all screwed up. You know, I mean, we should be transitioning people from needing Section 8 to not needing Section 8, not incentivizing them to stay in their situation so that they can get free housing. Another topic, but I just wanted to acknowledge that I understand that. I don't love the program as it exists as a government taxpayer. I like it as a landlord.
Well, I appreciate you brought that up because I never really thought of it from that side of it. I think I kind of lean towards, you know, what you're getting at there. I mean, I think that these housing opportunities shouldn't be crutches. They should be something that people can use to get to the next step of their life, for sure. But, you know, that being said, from the real estate investor side of things, it definitely offers a good avenue to go for securing cash flow and making sure that you have all your bills paid. So do you have any tips that you might suggest that landlords or real estate investors observe when they're getting into Section 8 housing? Anything that's specific to that type of real estate strategy?
If I was starting out and I had a low end unit, all I would do is I would advertise it to the market as normal. I'd put my asking price out there, and then you're going to be contacted by regular people and people who are like, I have a Section 8 voucher. And my advice would be to say, walk down the road with them. Now, sometimes the process can take a little bit longer, not much longer, but a little bit longer, and there's more paperwork. But by going through the paperwork, there are some benefits. Like Section 8 tenants in my portfolio stay longer, less turnover. That's one of the big names of the game for me. You turn property over, you not only have vacancy, but you have more repairs than if someone's going to stay for a decade. I have Section 8 tenants stay over a decade. So is it worth an extra week and an hour's more paperwork to do that? It is to me. So I would say just, advertise your property to the market. Don't discriminate. If a regular person comes and they want the unit and they qualify, rent it to them. If a Section 8 person comes first and they want the unit and they can qualify, rent it to them. And then just see how your experience goes. Now, down the road, I have taken a initiative to develop relationships with the housing coordinators. And, I will email them and let them know when I have a vacancy coming up, and they might fill it even before it comes up. Or even the inspectors. Like, you treat people with respect and you show them that you value them. People, I know they're happy when they hear they're coming to inspect my units, and then they come and they complain about the other landlords that are bitching that they had to fail them because of something. And I'm like, okay, look, I understand you're going to fail me, but can you wait 15 minutes? I'll fix it real quick and then you could do it. And they're like, sure, Jeff, of course. And it's just about being respectful and nice to them, and, be cool is my advice.
Exactly. Exactly. So, I got two things here, because you said if they qualify. And I think this is something that a lot of people don't understand too, is that you still have minimum requirements to rent your property. And just because they're using a HUD voucher, that takes the income portion out, but it might not take the background check, the credit score, any of that stuff out of there. So isn't that the case when it comes to it?
100%. Yeah. You have discretion as long as you're applying the discretion equally to everyone. You can hold your own.
Exactly. And I think sometimes people don't realize that. They're like, oh, well, if I'm taking someone with a HUD voucher or Section 8 that, they have terrible credit, or their background might have X, Y, and Z on it. And it's like, wait a minute, you're just you're just taking care of the income portion. Everything else still has to work out with your minimum requirements. So I really love this topic, because we haven't really touched base on this particular strategy very much on the podcast. And with that, I kind of want to revert back to how you've been able to grow this portfolio to where it is now. Has it been just one property at a time every year? Were you doing the BRRRR strategy? Like, how did you fund all of this? Like, for the listeners out there that are now thinking like, okay, maybe I can go in with a lower, price per unit property and maybe go Section 8. Like, what are those next steps that you followed to get this, massive portfolio that you're at today?
So it was pretty much one by one. Some years were more active than others. When prices go lower, the cash flow gets more attractive, and I get excited, and I look to borrow whatever I can from whoever I can. Now, when I was a younger guy, I was borrowing hard money at 15%, 5 points. And I was just like, this just makes too much sense. Like, let me get it under my control, and then I'll be able to BRRRR it out. And I did a lot of BRRRRs before I ever heard the term BRRRR. It was just, it wasn't even a strategy. It was just like logic. Like, let me get this, let me own this, let me rent it out, and then let me shop it to a bank that will finance it to me at a much better rate. So it was a lot of that. It was, another tip for people is when you're looking for financing, you got to talk to not 3 lenders, not 5 lenders, not 8 lenders. Talk to 20. I used to dedicate days where I would just actually put on nice clothes and door knock at banks. And I would walk in and I'd say, who does, lending to people like me? And I would lay out my goals and objectives and my financial statement. And I'd say, do you want to work with me? Like, did your bank have an appetite for this? And most of the time the answer is no. But then when you find the one that has an appetite and an understanding for you, then you know where to go. And then, so, I mean, that day spent talking to 13 banks where it was a pain in the butt at 12 of them, very worth it.
When it comes to the financing that you've gotten in place, do you do a 1-for-1 loan to property, or do you have any portfolio loans that you've kind of cross-collateralized the properties that you have? Because I imagine, what you're buying is probably a lower price point. So I'm just wondering, how you're packaging these up for financing.
I've done all of the above, and I have a couple of loans that are cross collateralized, but most of them are one for one. And I'll tell you how conservative I am as a person. Way back, even when I didn't have that great a cash flow, I took a bunch of 15-year loans, which obviously mathematically isn't smart, but I accounted for human nature. And I just said, I don't want to even have the ability to spend this money. I'm going to do this principal pay down every single month, and it's just going to be there. And you know what? If I didn't do that, I'd probably be a little bit richer. But that's only because things went really well. If they went poorly, I would have had a bigger safety net. And that was an exchange I was willing to make. But to answer the question, most of my loans are one by one. I have 15s, I have 30s, I have a bunch now. Lending has gotten tougher for me. Like, I don't even think I could get a 30-year fixed anymore, but I found a bank that wanted to deal with me back in the day, and I got a bunch of them. Now, most of the loans I'm getting are a 25-year term, 5-year fixed, and then adjustable for 5, balloon, and 10. That's what I've been getting lately.
Commercial, so you're buying them now underneath one of your LLCs or business names.
Yeah. Yep.
Exactly. So I kind of want to dive into that too, because everybody talks about, oh, you can only have 10 loans in your name. You can only have 10.
True.
And it's like, no, you can have a lot more, but typically what happens is as you grow, you start putting the properties into an LLC or into a business, to get that commercial financing. And with that, have you utilized like any owner financing or seller financing or anything like that inside of your portfolio, or has it all been, kind of traditional?
A little bit, not as much as I would have liked to. I'm not a natural salesman, and I wish that I could get more private financing, more seller financing, but I haven't been able to. I've gotten a little bit, and it's been very, very good for both parties. When we sign the deal, what I'm paying them is greater than what they were getting otherwise, and it's lower than what I would be paying. So seller financing is beautiful if you're committed to looking for it. But the other thing is, like, I bought a lot of my properties off the MLS. I buy listed property and I bought auction property, and now I get some word of mouth property. But when I was starting out and I was going to all those seminars and all those gurus, I would get discouraged because they're like, you have to have these deal sourcing systems, you have to have these mailers, you have to have people coming to you and buying 30% under market value. And of all the people sitting in the room back in 2006, I'm pretty sure I'm doing better than 99% of them. And I bought my properties on market. And it's not to say that that method isn't better, but it's just, you can figure it out. Like, every once in a while, there's a good deal on the MLS. I've seen stuff mispriced so badly. And other times, just, I buy locally. I buy where I live. So I'm looking for cash flow, but I'm also aware of where is the puck going to be going, as Wayne Gretzky says. Don't skate where the puck is, skate where it's going. Where is development headed? Where are things getting better? And I'll buy in those areas, and then the puck gets there and things are beautiful.
I love that. I think that's very important for everyone to kind of take note of, is, becoming an expert in your own market. And you probably know the market a little bit better than the agents that are there pricing the homes to begin with, especially for the product that you're purchasing to begin with. I did have one question. I want to go back to Section 8 really quick, and it has to do with the inspection process. And for our listeners who are kind of thinking about getting into that strategy, what are some of the big ticket items that you have noted to come up in the inspection process that investors can just be aware of and maybe apply some preventative maintenance to, so it doesn't have to become a pain in the ass when the inspector's there?
Sure, it's just little stuff. I mean, they're going to flick all the lights and make sure they work. Your fan above your stove, they're going to check all the windows to make sure they move up and down smoothly. They're going to check the smoke detectors. So, in my car, I have smoke detectors and batteries just there because it's going to come up. It's just little things like that, just making sure everything is functioning properly. But, you're not guaranteeing too much. Your windows, walls, a functioning bathroom with an exhaust fan, a stove with an exhaust fan. Make sure the locks work, make sure you're changing your locks. Simple stuff. It's really not that hard.
Gotcha.
Yeah,
and
outlets.
Yeah. All the things that make common sense. You don't want the house burning down or be any leaks or anything like that. So you're at about 90 units, correct?
Correct.
Okay. So are you managing all these yourself, or do you have a third-party manager? Like, I feel like you're at that number where it's more than a one-man game at that point. But tell us what your systems look like for managing all this all these assets you have.
So I am anti-property management for a number of reasons. I manage them all technically, even though most or over half of them are in Massachusetts. But when I lived in Massachusetts, that was all I had, and that's what I managed. I developed relationships with some contractors, and I found one that was very, very good. And me and him developed a very trustworthy relationship over time. So I was getting ready to move to Florida, and I was like, I think you can do the stuff I do. I mean, I go away on vacation and you do it. Basically, you just show the apartments, you interact with the tenants, and you can do this. And he reluctantly agreed, and 4 years have gone by, and sometimes I tell him he does it better than I do. So think about the efficiency. If I hired a property management company, they would try to hire someone like my guy Dan, and they would find someone not as good as Dan. So the tenant would call the property management company, and then the property management company would call the handyman, and I just cut out the property management company. And so at 10% of my rents, the amount of money it would cost me to avoid a few phone calls. So I'm in Florida. I manage 35 units down here, no property manager. And what happens in property management? I take a call and I make a call. Someone texted me this morning, my AC is not working. I said, okay. I texted the AC guy. I said, can you call this guy? And it's just about developing these relationships with contractors. Another thing property management companies do is they call the highest price vendor in town because they're the most reliable and they're the most professional and they're the easiest to deal with. I don't use the cheapest contractor, but I use a reasonably priced one that understands the value I provide. A lot of work, I'm easy to deal with, I pay immediately. So we're going to treat each other fairly. And you're going to do good, but I'm going to do good. And the efficiency of taking out the property management has it's also lowered my risk considerably because my cash flow is higher. It's that much more margin between that and my financing. So doing what people perceive because of those overblown stories as hard work is really not that hard. And it's allowed me so much time managing 90 units that I spend more time operating my men's group.
So Matt, I got to ask, man, like how many units do you think you can get up to? Like, we're kind of traversing into the goal territory, but what does your bandwidth look like for the systems you have in place? Kind of managing it in the current way that you do, or do you have thoughts for kind of expanding in one way or another to accommodate that growth?
Great question. And I don't know where the bandwidth ends. I know I could handle a lot more than I do now, like a lot more. But back to the cash flow, I don't see much cash flow out there right now. So I'm not aggressively looking. However, I moved to Florida. I needed some new friends. I didn't know how to make friends. So I joined a men's league hockey team. I was like, okay, here, I have a bunch of friends. And this is how the world works, right? I go in the locker room the first day, and there is Phil Janexi, who I know as the best multifamily broker in Sarasota. I'm like, dude, not only do you play hockey, you're on my team. Within 3 months later, he sold me a package of 11 condos at this condo complex, right? Since then, he sold me 4 or 5 more, and I've gotten another 6 more through word of mouth. Now, like, they know I'm buying them over there. So I will continue to buy those units when owners bring them to me at reasonable prices, just because it's easy to run over there and the cash flow is pretty good, even at market prices right now. My eyes are open. If the market offers me cash flow, I will put my foot back on the pedal and I'll get to 100, 120, 150 units. I don't know. But right now in my life, I'm cool. Like, I don't need to force anything and I don't need more money. I get more satisfaction helping guys turn their life around in the men's group. So I try to keep that in mind. Like, I still like money and I still like to make money, and I trade stocks every day. And that's been a passion. But no, as far as like, I'm not going to force real estate deals. And like I said, I don't have great methods to source or off market deals. But if someone brings me a great deal, I'll buy it. So bring me one.
I love that. I love that. You've spent the time over the years to know what your buy box is, to know what great cash flow is, to know how to manage these properties, to put your, quote unquote systems in place and know what you're capable of and what you're able to see other people be capable of. And you're like, look, I'm good. I've spent the time. I'm kind of where I'm at. And with that, just if some arbitrary numbers out there, like with a 90 unit portfolio on Section 8, can you give us an idea of kind of what that looks like in an overall like monthly cash flow scenario?
I probably could. I don't think I've ever said this number publicly. My rent roll, the 140,000 a month.
Is that's gross?
Yes.
Gross. Okay. And your cash on cash, what would you say is probably 20, 30%?
I don't even know. And it's geez, I can't even calculate cash on cash anymore. Cause I mean, if I bought a 3-family for 65 grand and then I refinance it for 250 and then I refinance it for 4 and then I sell it for 525 and I 1031 that into some 1.25 million, I'm just not that good at math. I can't.
Exactly. Now, I understand, but I mean, a 90 unit portfolio bringing in 140, you're doing all right. Like you said, things are good. Things are golden. And that would over 15 years, like anyone out there can do it, and that's kind of sometimes the point of that question is like, hey, look, just an average guy who hated school, dreaded the 9 to 5, 15 years later is able to bring, you've created a I don't know, that's close to a 1.5 1.6 million a year gross business, just by knowing your buy box and doing all the simple things. So I think that's absolutely amazing, and I know a ton of our listeners out there are inspired. And now I kind of want to get into the men's group. Like let's talk about this men's group, why you started it, what it is about, and share that with us.
Yeah, thanks, man. These are my 2 favorite topics, real estate and my men's group. But so I actually didn't start it. I joined as a member in 2018, and it was a newer group and it was led by a couple other guys. And I had some personal development to go through. I needed to grow. I needed to become stronger mentally. And I wasn't as happy as I am today. I had a lot of anxiety, I had a lot of self-doubt, just mental stuff. And I did the work in the group. I embraced my weaknesses. I looked at what I needed to improve. And there's a couple of really phenomenal coaches in the group. And then over the years, they realized the type of guy I am. And they also saw that like I did overcome those things. And we negotiated a deal where now I'm a third owner and I spend a lot of time, we have Zoom calls and we help people on sex and relationships, marriages and fatherhood. There's a weekly fatherhood call and fitness. I mean, the before and afters of our guys, I posted some on Twitter today. I mean, you can hire a trainer and they'll teach you how to exercise. And that's one thing. And some people get it that way. But our group, you become involved and your friends are people doing the right things and they keep you accountable and they push you and they support you. And man, the guys get themselves in good shape. And it's like, that's just the way life is. I'm not making myself go to the gym anymore. That's just the guy I am. So, what it did for me is it made me happy. It made me like myself more. It made me feel good about myself, made me a better leader. And that's been a gift I've been able to give to my family. My children are happier. My wife is much happier. So because it gave me so much, I knew that I wanted to put myself back into that and help others get what I got the last few years.
I think that is, I can't even emphasize how important, what you're discussing right now is. I had a great men's group up in Maryland when I lived there, came down to North Carolina, whole transition thing. Everything that we had up there was in person, moved down here. I literally put on 30 pounds because I lost that accountability, that weekly accountability. And, it's like, I'm sitting here thinking like, damn it, I need to get back into something like this because I see how powerful it is. And it's literally, it can be simplified to just accountability with people who have the same goals as you do. So I think that's freaking awesome. So tell me a little bit about this group. Like, how intimate do you guys get with other men in this group? Like, are you like talking about financial net worth? Are you guys, really peeling down the onion? Like, how involved are you guys getting with each other's affairs to kind of break down those layers and making it so that people can improve themselves?
We develop deep relationships in the group. So there's a message board with a bunch of channels. There's a real estate channel. I, of course, will answer everyone's real estate questions in the real estate channel. We have a different finance channel. I've run financial workshops for, just personal finance, getting out of credit card debt, that kind of stuff. But yeah, the more transparent and honest you are, the more you get out of it. So some people are a little hesitant and maybe it takes them a while, but then they don't progress as quickly. But the people that really lay it all out there and say, guys, this is tough to say, but this is what I'm dealing with, they get some answers, especially when you're not defensive, taking the advice, and the advice doesn't even have to work, but it's coming from a good place. So we have a lot of Zooms. We have the message board. It's active on a daily basis. And next weekend, a bunch of us are meeting up in West Virginia. We're going whitewater rafting and rappelling and hiking and stuff. So we prioritize in-person meetups. I had a couple of guys over my house 2 weekends ago. So it's very, very involved. It's a big part of my life.
Love that.
That's amazing. That's amazing. So for the listeners out there that are like James, looking for something like that, like what would you say would be some of like the key things to look for in a group, whether it's your group or whether it's a group similar to that can help our listeners out, if they're considering something like this?
Yeah, that's a good question. And it makes me think, all the glitters isn't gold online. There's so many people pretending to be someone they're not. All I can tell you really is firsthand that we're real. One thing we did recently is some of these groups allow you to use pseudonyms and not use your real identity. And actually, when I became owner, I said, I don't want this. I want to be real men doing real work, getting real results. So now, we have a policy that you have to use your real name and picture. I think that's a good thing to look for, unless, if you want to join a group and you want to hide behind some fake picture or something, I don't think you're going to make the progress that you're going to make in our group. I'm sure there are other groups out there that are good. I would say to take a hard look at the owner, and you have to decide, is this guy telling the truth or not? Do I want to be like this guy? Like, is he living a virtuous life? Do I admire it? There's been a couple of other groups where leaders have done some things that were embarrassing, and their groups kind of crumbled after that. So you want to look at the leadership group and make a bet. Are these people going to embarrass me, or are they living lives? Are they who they say they are? And that's a judgment call that only you can make.
So tell me about your average, member in this organization. Like, where do they come in at, with their lives? We can maybe keep this in the financial side of things, like net worth, income, cash flow, and like, where is the average person that might have like committed to this? Because I'm sure there might be a lot of people who kind of participate, but aren't getting out of it what they otherwise should because they're not committing like they should. But ideally speaking, like, where is this transformation happening, and where are you taking people from A to B?
So financially, we are all over the map a little bit. The younger guys aren't doing as well as the older guys per se. We're not a bunch of CEOs, definitely regular guys, middle-class guys. And, there are so many different guys. It's hard to give you the average, but some guys do come in and don't have any financial acumen, and maybe they're carrying some credit card debt. That's one thing we do, is kind of explain the basics of personal finance, paying interest versus earning interest, and investments that they can do as far as just the easy stuff. Pick the low-hanging fruit for them. Now, there's some people that are more sophisticated, and we'll talk with them one-on-one or have Zooms, or I meet everyone where they're at as far as that. A lot of people come in, and I think this is an epidemic in America, and it's actually one of the reasons I came in. It is because I wanted my marriage to be more passionate. We had a good marriage, and we were like best friends, and we were equals and stuff. And what I learned over time is that's not what my wife wanted. She didn't want a best buddy. She wanted someone to lead her through life. She wanted me to be the shield for the family. And we've kind of societally backed off from that a little bit. And I think there's a lot of resentment coming from wives that men are not stepping up. So men come in and they don't realize that. They just are like, why isn't this the way it should be? And oftentimes that's the answer, is because they are dulling their masculine edge. And we kind of time, like, being masculine isn't a bad thing. That's what God made you as. This is being a leader and looking out for your children and protecting your family and speaking up and saying what's right. These are admirable things. These aren't bad things. So don't suppress your true self. Live free, be authentic. And then once people find their authentic self and express themselves and become more free, life gets so much more beautiful for them and everyone in their world.
Exactly. And I think this is huge. And I also believe that, I think, when you get your overall wealth and health and mindset and everything together, it allows you to really focus on all the things that are important, right? Whether it is your self-esteem, whether it is your physique, whether it is your finances, whether it is your mental health. When you start to work on one, it just makes working on the other ones that much easier. And just like with credit card debt, the snowball effect really starts coming full swing, where you really, the changes are very small, but they progress into something really big. And that sounds really amazing. I mean, I love exactly what you're doing. How many people do you have in this group?
Right now there's 140. We're looking to grow. Right now we got 140, and any one Zoom might have 25 people on it. I would say, I think there were 2,000 posts on the message board last week, so it's very active.
That's amazing. That's amazing. So let's go ahead, James.
I got to ask, man, what's it cost? Someone wants to get involved with this. If they've been jazzed up from the conversation we've had for the past 15 minutes, man, like, what does this run somebody to get to be a part of this? And, not only what does it cost, like what's the initiation process look like?
Well, today for your listeners, now I'm just kidding. It's $99 a month. We keep it real simple. And I've been in other groups and I know the value that we deliver, and it's kind of insane how much value we deliver, but it's $99 a month. You're welcome to come. Anyone's welcome to come. There is an onboarding process. You're going to talk to our moderator. He's going to make sure, you have good intentions on joining the group, a half-hour conversation. And then you're in, and we're going to interact with you. And, it's going to go from there. If it's not for you, you can leave at any time. Our retention is very, very good. We hold people a long time because it works. It works.
I really like that. I think, you're basically just investing in yourself, $100 a month to invest in yourself. People are spending way more than that on way worse, just to get your mindset right, just to get, like you said, around a group. I mean, if you're listening to this podcast right now, you're already wanting to do better. You're already wanting something in your life to be able to propel you to do better than you were yesterday, last week, last month, last year, so that's what we're here to do. And I mean, the group sounds fantastic. And what are your goals with the group? Let's kind of dive into those goals a little bit for this particular group, and for everything else.
Sure. I don't know that I've mentioned the name enough. So it's the Fraternity of Excellence. And my goals are to make it a lot bigger personally, but that is not a certainty just because I'm not an online person. I'm not an online marketer. I'm a real life person, but I'm using the online tools to connect with other men and build relationships that way. So I would like to bring in, I don't know, 100 guys over the next year or two, and then double it again. And we'll have to grow, and we'll have to figure out how to service those people. I am confident that we will be able to do that. However, I haven't personally figured out how to position it well in the market yet. So that's why we are at 140 members, because I think that, how many men are there in this country? 150 million. And I meet, 100, 200 a year, and I never meet a guy that wouldn't benefit in some way. And I know some guys that are worth 100 million and they would benefit. And I know guys that are very, not affluent, and they would benefit in another way. Everyone has a weakness, and most of the time we're kind of sweeping that weakness under the rug. But if you shine a light on it, whatever you shine a light on, you're going to be able to examine and address. And then, man, the self-respect and the self-esteem you have after you have looked it in the face and you've said, what, we're going to deal with this. We're going to confront it head on. It's a beautiful thing.
Well, Jeff, I'm going to hold myself accountable right here. I'm going to sign up for this, man, because, I'm all jazzed up about it. I think you guys are doing something great. You're preaching all the things that I appreciated being involved with when I was a part of my peer group mastermind of 6 dudes up in Maryland that I'm kind of missing out on now because, for everyone who's listening, like when you realize what you're lacking in making the progress in your life to where you want to be, it's these kind of groups that can really help you not only identify that, but take action on correcting it. Because, when you're doing these small little things, just literally screw yourself every day, you might not pick up on it or appreciate that you need to change it. And it's having a group like this that really fixes it. So, personally, I'm going to be signing up, man. After I get off this call with you, point me in the direction. Might as well just get it out of the way now. Like, where do people go to sign up and, get involved with this?
You just go right to fraternityofexcellence.com, fraternityofexcellence.com, and then there's a button that says join now. Super simple process. I'm thrilled to hear it, and I'm also happy for you because it's a worthwhile thing. So,
well,
good
be happy
decision
for me after I get those goals and achieve those goals through the program that I'm setting out to. So,
let's do it.
One thing,
let's
but
do it, man.
Fighting for it, that's the next step. So.
Exactly. James and I have a little chat that we go back and forth on when we're doing the podcast, and we're both signing up. I mean, I'm definitely going to be doing this as well. we've talked about something like this for quite a while. So I think this is going to be awesome, and we're going to keep all the listeners posted on all of this, on our experience going through everything. And with that, I kind of want to dive into, what's the motivation behind this? I mean, we can already tell you're really passionate, but like let's break that down a little bit on, your personal motivation, for building this, tribe.
It was like I said before, I went through something that gave me so much. And it's really like the happiness. Like I wasn't unhappy, but it was self-doubt and anxiety. So I wasn't living at the level that I'm living today. And you join the group and you get me, but you also get the guy that got me here, who is an incredible coach. His name is Zach Small, and he's the most mentally strong man I've ever met. And he's 10 years younger than me. And he's also the wisest man I've ever met. So my motivation, one of them, is not only to build this up so people can have the experience, but I want to put more people in front of Zach, because he has this incredible talent to help men find their confidence. And I believe that is how you change the world. There's like, I'll give you an example. Before I joined, I would take my daughter to soccer practice and I'd sit on the sidelines and I'd watch her. And that, I thought that's what I was supposed to be doing. And Zach is like, dude, what are you doing? Get out on the field and coach her. And I'm like, but I'm not a soccer player. He's like, so you get out there and you do it. You show her the way. And I've been coaching for the last 8 seasons. Thank God I got that message while she was still a little girl and not too late, because coaching for the last 8 seasons has been so incredibly valuable to me. I do not want younger me to miss that. When I see a 35-year-old guy, that's me when I was 35, I want to make sure he gets that message in time. So that is my motivation, is like, when you're putting yourself and setting a good example for these kids, I'm in good shape. I do things the right way. I treat people the right way. These kids are watching me. So I have a chance to impact not only my daughter, but these children in their town. And I don't know who their male influences are at home. So I want to make sure, like, I am putting out my best foot forward to inspire the next generation to stand up and do the right things. And that's where I get motivated.
That's awesome. I'm just, I'm sitting here, it's not that I don't have anything to say, that it's just a lot to intake. I've got a 13-year-old boy at home now, and I have a lot of these thoughts myself. And you strive to be the man you want to be for your child, to look at and respect and emulate those positive things in yourself, in them in the future. So I think this is a great message for everybody. Even if you don't have kids, like everyone wants to be a better person. So I think this is fantastic. I do have a question though, for growing your fraternity of excellence. What obstacles do you foresee before you're really able to expand your reach to get 100 people this year and then beyond that?
Just technical stuff. I need to learn how to buy ads, maybe. We've never really done paid promotional. Even before I got there was never a promotional ad. I'm new to content creation, so I don't have much of a following. I have a 3,000 on Twitter and just 1,000 on Instagram and stuff. And I think I just need to get out there more, be a little bit more visible. I'll tell you another thing. I actually went to visit Sean Whalen, who owns the Lions Not Sheep company, and he's a big Instagram influencer. And I sat with him and I said, what is it? We had a conversation, and he told me, you try to be right instead of trying to be real. And I'm like, oh my God, you're so right. Like, whenever I make a statement online, I'm always thinking about what's going to be the counter argument and how do I solve that before I'm even asked the question. And that's not what I should do. I should tell you, I like Section 8 rentals because they work for me. Now, you might tell me why they're wrong, and that's okay. I just got to be real and tell you what I think. So becoming even more real and more authentic and just giving all of myself. If I do that well, the group is going to grow.
Love it.
I 1,000% agree. I agree so much. And what you said there is what's going through just about 95% of people's minds at all times before they make that post on Instagram or Facebook or TikTok, before they start that podcast, before they go and start that YouTube channel that they've been wanting to do, before they go and tell their significant other or their friends that they're thinking about investing in real estate. And they're so worried about what everybody else is going to say, and they have to have all the answers, and they just never do anything. And it's throughout everywhere. People are so worried about other people instead of the person that matters the most, which is ourselves, the one we have to lay down and put our head on the pillow each and every night. So I think that speaks volumes. And, the fact that you're self-aware of that, really shows that you're going to plow through that this year. And James and I both know that you are 100% going to reach those goals. And we'll definitely have you back on the podcast in a year to see, kind of where you're at and follow up with that whole journey, so that is freaking amazing. And I love that. So
I'll look forward to coming back. I'll put it in my calendar.
1,000%, 1,000%. Well, before we go into our next segment of the show, I do have to ask though, with going back to the real estate thing before we go to the next segment, do you have a goal for your portfolio? I know we talked about this a little bit, but over the next just even long-term super goal, you say you could do more. So is there an arbitrary goal that you have in mind, like somewhere deep down inside that says, I'm going to own 250 doors, I'm going to own 500 or 1,000 or 110, like just put it out there. What's it telling you?
I mean, I got to get to 100 just to do it, right? I'm the only 10 away. So I'll do that. But it's funny, like I spend a lot of time and I'll look at people doing huge deals and buying, 40 unit or 80 unit places. I'm like, why isn't that me? And then I'll wake up and be like, no, what I do is fine. I hit singles, whatever. I buy these small places and it works for me. So I'm just conscious not to force the market. I let the market come to me. Right now, it's not coming to me. I do expect at some point in the next 20 years, we will have a buying opportunity, a macro one. And when that happens, I'm confident I'll be able to recognize it, and then I'll probably acquire a bunch more.
Boom. And I wanted to ask that question because I knew it was going to be a great answer. And that's okay. There's a ton of other people out there probably thinking the same thing. Like, why am I not doing these giant deals? And why am I not doing this? And you don't need to do that to be successful. You just need that for the Instagram clout and to sell your courses. Like you can hit singles all day and become extremely financially independent and free. So that's freaking awesome. And with that, we're going into the next segment of the show that we call the Big Four. James.
All right, Jeff, we're going to lob you some softballs here, man. So what is something that you do that's a financial independence hack or a cheat code, something that you've done that has really helped you to build your wealth?
So forever, for a very long time, I lived well below my means. I'm not attached to material things by any means. So it was easy for me. Like I said, I did the 15-year loans, and that speaks to that. So I kept my lifestyle suppressed, but I never felt it. I never felt like I was missing out just because I was very aware that the material stuff, it never appealed to me. So just living within my means, there's a lot of memes out there about, save your coffee, make your coffee at home and make fun of that. I actually think it matters. And I think it matters, especially in your 20s, because if you are a good investor, if you are going to put the difference to work, I mean, $5,000 back in my 20s is worth who knows how much now with the compounding. So I think keeping lifestyle creep in check has been very important to me. I've let it go in the last couple of years, but keeping it under wraps for a very long time, I'd say that was my biggest hack.
Boom. What a great hack. What a great hack. All right. Number 2, we call this one resources. So have there been any particular books, podcast, people that have really shaped your financial independence journey to help you get to where you are today?
Too many to name for sure, but the two that pop to mind right now, I love these 2 books. One of them is called Landlording by Lee Robinson. It was written in like the 60s or 70s. And it's just teaches you how to do property management like yourself. And I like to do my own management, and I recommend new people do as well. The other books that I love are the Section 8 Bibles, 1, 2, and 3. And those were probably written in the mid 90s or maybe the early 2000s. These 2 guys from Philadelphia built up, I don't know, a 300 single family house portfolio, all Section 8 in the worst neighborhoods in Philadelphia. And they have some colorful stories. The stories are funny, but they teach you how to do it. So those 2 books, Section 8 Bibles and Landlording by Lee Robinson.
First 2 times we've ever heard those. So you came with drop some nuggets here that we definitely have to go check out. So with that, James, number 3.
All right, Jeff, it's 5 years in the future. What's your life look like? Personal, business, whichever route you want to take it. Like, where are you 5 years from now?
Yeah, hopefully a lot better than I am today as far as happiness and growth and capability. And I hope to harness everything about me and be able to influence more. And I don't mean like an online influencer, but I mean influence the men that come into my group more effectively. Because that's really what drives me. I want to be able to help all the guys that come in reach what they're doing. You know, sometimes it's a fine line because I have to say how I do it, but I want to be able to deliver that message in a way that is extremely effective. So I hope I'm able to grow in that area. I hope I keep getting richer, and you know, I hope my family continues to thrive as my kids grow older. I want to see them do extremely well, and be happy and be free. So yeah, those are my goals.
Love that. Love that. All right. And with that, for our listeners out there that definitely feel motivated, that feel inspired, that have definitely been educated through this hour-long conversation with you, where is the best place for them to follow you, get in touch with you, reach out to you, and tell you? So drop them for us.
So the fraternity or fraternityofexcellence.com. And I mean, you join the group, you can talk to me about real estate. I think that's worth the $99 a month, let alone all the other stuff. But on Twitter, I am at Jeffrey Higgins. On Instagram, I am at Jeff Hig. I also have the Efficient Victory podcast, which you can look up. But if you go on my Instagram, I have a link tree. You can find me on there. Send me a message either place. I'll talk to you. I'd be happy to hear from you. So reach out.
Boom. Love that. All right, guys, you guys know the drill. If you guys love content like this that we're bringing you each and every week, remember, this podcast is free, but not quite. All we ask is that you like this video, leave us a review on Apple, Spotify, Google, all of that. Go subscribe to our YouTube channel. Do something. Send us a DM and let us know that we're on the right path or that wrong path, whatever. Reach out to us. Let us know. And with that, we'll catch you next time.
See you guys.
Peace.